MicroStrategy's premium to me is a sentiment gauge of Bitcoin. Okay. So when the community is really enthusiastic, the premium heads up towards 3.
The catalyst for this shift is a simple yet powerful macroeconomic force: the movement of interest rates. When the Federal Reserve began its aggressive hiking cycle, it dealt a heavy blow to the parts of the economy most sensitive to borrowing costs. This meant housing, small-cap stocks, manufacturing, and sectors tied to the auto industry all struggled. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The housing stocks have been doing great. Home Depot is near a 4-year high, and it's been in this range. I know I've talked about PMIs a lot, and I know we went through and described what it was, but just so everyone hears this, I'm going to keep pounding the table that the market is going to start to go through a bit of a change where the leadership is going to change. And a lot of these long-term charts, and long-term meaning most of these stocks peaked before the Fed started hiking rates. And once they started hiking rates, the parts of the economy that were the most sensitive to rates, the stocks, this means housing, this means small cap stocks, they had trouble. Manufacturing, anything related to autos, all had trouble. Now we're moving rates down, and you're seeing, 10-year rates are just above 4%. This is the lowest level they've been in, as you said, for mortgages in almost 30 months now. So I do think the housing market is going to see a pickup from that. But as I've said, I really do believe the administration is going to declare a housing emergency. And that just means they're going to look for other ways to bring this down more, which means mortgage spreads will probably tighten up. And that means that mortgage rates will come down even if 10-year rates don't come down much more, or 30-year rates don't come down much more. So I think people have to get used to the fact that I do believe there's going to be a little bit of a housing change, and those stocks are going to do well. That should mean transportation stocks do well. And all of this comes, like I said, Oracle's got a lot of orders. Think of those orders as being software orders, AI. But this is where software meets hardware. To actually fulfill those orders, they need more data centers. They need more electricity. And so you're going to have this next phase where they're saying, we don't have the capacity anymore, guys. We got to build out this stuff. It's a lot of semiconductors. It's a lot of physical things that are going to start to be needed over the course of the next year. Part of what you said, I've highlighted in recent writings and in the video last week. I spent a lot of time on how the administration realizes that for national security. So let's go back to the worst part of the tariffs. The market's collapsing. You and I are sitting here and we just keep taking out our little 3-iron and we're hitting the ball down the middle of the fairway and going, okay, everyone's going to panic. Everyone goes through this. They're worried about doom and gloom, but it'll work itself out. And the reason it'll work itself out is at the end of the day, number one, the stock market's not allowed to fall because it's been financialized. So it can't fall, or there's a recession. We can't have a recession because we have 6 to 7% deficit, debt to GDP 100. You can't do that. Okay, so what's the other problem? The other problem is we have a national security issue. What's the national security issue? Well, if someone gets AI before us, we're at a huge disadvantage. So we need to focus on AI. What else do we depend on? Well, to actually get the AI, we have a national security issue. What's that? Most of the stuff we need for the AI is made in China. So we're racing with China. They have a lot of our supply chain. Okay, so we have to change this whole thing, and we need to declare emergencies around national security. And so Taiwan Semi, you're going to build a fab here because your chips are sitting a boat's ride away from China. So exactly what you're saying is what's happening. And this is why they are going to continue to focus on, we got to go get our own rare earth. We have to build our own semiconductors here. We have to, and just keep going down the line. So the way that they're going to speed the things up here to the best of the ability is through the permitting side. It's through the tax incentives. So for CapEx, by allowing them to change the accounting rules on how they deal with the CapEx so that they can grow their way into it, that's kind of like a subsidy. It's kind of like, okay, you guys spend today, you're going to hopefully grow into it with your return on invested capital. The problem is, do I believe that, like in China, that means there's going to be a misallocation of resources? You're damn right I do. But that's 5 years down the road. And our job as investors is to think about what the way the market's going to work over the next year. There are going to be PMIs that are going up because the government is reducing the friction and setting a path. And as I've heard all of them say, and especially Chris Wright for the Department of Energy, if you have a situation where you can produce power and you're having restrictions, you call us up. That's a different mentality than it was before, where you couldn't get through to the administration on certain items. So they have made this a critical situation. Everyone can argue about whether it's the right thing to do, just like with the Fed. The reality is, as investors, they're allowing this to happen. There's going to be a misallocation of resources, but that's way down the road. And right now, this is a national security issue, which means we're going to grow the economy hot and we're going to move rates lower. That's the playing field you're involved in. So I think all of that's going to happen. I think there is a lot of China thing, because I think if your competitors doing these things, you can't do exactly what they're doing, but you can do a form to kind of speed up and make sure that we can move at the same pace. That's why over time, if you go back and look at money supply growth, there is a relationship between what the interest rates are. So in the 1970s, when people were like, well, money supply was going through the roof. If you have money in a bank and the rates are 13%, and you have any kind of income and you don't touch it because you're bearish and you just don't want to spend any money, your money grows to some degree. Now, if inflation is also 13%, then you're spending more out of that. And that's where this whole relationship comes between the money supply and also the wages. At this point, with where we have rates, money supply is growing fairly rapidly around the globe right now. Part of that is the government handing out this money through, again, having interest rates and having a deficit.
This is where the concept of national security becomes the key driver. The U.S. is locked in a fierce, high-stakes race with China for dominance in artificial intelligence. However, to win this race, the U.S. is critically dependent on a supply chain largely based in China, especially for semiconductors and other crucial components.
There's a different way that people who are trying to learn how to invest their money, and part of the investing side is the trading side. And what I learned in Miami was this 3-bucket portfolio approach that crypto people had that is somewhat similar to what the Robinhood community has. And so people understand this, and I think everyone should do this. You have a bucket of money that, as you're making money or from your job and also investing, that's really the long-term stuff. That's in things that you're not moving around a lot. Think of that as Bitcoin, the Bitcoin bucket, or think of it as the Mag 7 bucket. Then you've got your next one, which is kind of the fundamental stories of things that you think are going to play out well that haven't played out yet. Let's put that as the Tesla or the Ethereum one. The ones that you kind of believe there's a fundamental story, you want to grow into it. And as that makes money, you take some of those off, you move it into the safety one. Basically, where people are dreaming a little bit that the thing is going to work out and it's going to play big. And so when you think about the way they're approaching it, it's different than the baby boomers investing. It's different where people focused on how much am I going to have in bonds and how much am I going to have in stocks. The long-term side, they've adjusted to this debasement story far better than the baby boomers. And the debasement story is this: the government has to have inflation to offset the debt. That means stock inflation. That means debasement of the currency. That means some form of assets have to do well. And I don't care which administration it is. I mean, we had a Democratic administration that got chastised for printing lots of money. We now have a new Republican administration, which says they want to run the economy hot. They're all debasement stories, and they get elected by the baby boomers who don't want a recession. So, you know, I made the comment that we haven't had a recession since before the iPhone. Before the iPhone, we had 9 trillion of debt, and now we have 37 trillion. People just have to understand that at the government level, we have locked ourselves into a world where the only way out of having this much debt is you can't have another recession. You can't have something big, or you end up in the Great Depression. And since we already know that, well, let's go with the unknown where it goes in. And that's why when people see the polarization of the government, the anger that people have, the violence that's happening around the globe, the inequality has left the world in a place that again, is part of the debasement story. That is why I migrated to understand crypto more. It's why I think AI is going to take us faster to a world where those two merge. And it happens at a time when very few people that I've met on Wall Street that were trained in the same way I did, trading markets, understanding macroeconomics, understanding the history, where I can talk all day long from 1920 all the way up about what's happened to markets and interest rates. And all of a sudden it's like, throw it all out the window. AI and crypto are the only thing that matters at this point. And that's the way I believe it. And that's what's dominating the markets. And that's why people are having a hard time adjust to it. I like the way the charts are starting to play out. I think this was an important month because I wanted to see if it finally responded to good news, but it's the ecosystem, the broader things. I'm seeing a lot of mini breakouts technically right now. And these are just small things for me, but we talked about Ethereum when it got through 4,000. What I really wanted to see was Ethereum got through 4,000. Now it's been consolidating between 4 and 5. Great. All-time highs are up around 5. Once it actually breaks through and goes, we need the entire ecosystem to be going. And that means Dogecoin needs to be going, and Sui needs to be going, and other parts that are showing up. And each of them has they're all moving in a synchronized manner right now. So I think there's going to be a chase in these things that is going to start. I'm still, like I said, I'm not worried about Bitcoin a year from now. I'm not worried. I was already wrong on how far I thought it would be this year, but I still think before now and the end of the year, with what's happening on stocks, and they kind of have a little melt up look to them, we still don't have sentiment at high enough levels. So I think between now and the end of the year, if I'm right about the PMIs, I think Bitcoin will still get up. I'm not going to put any more levels on because it's not going to where I thought 3 months ago, but everything's starting to look like it's starting to move. But the best thing, having been in this thing for a while now, and again, I've said this repeatedly, MicroStrategy, when people start sending me something like, are these companies going to blow up now? I'm like, what are you talking about? Well, MicroStrategy, the premium's coming in. How do you think about it? So everyone hears this, and I don't know why. MicroStrategy's premium to me is a sentiment gauge of Bitcoin. Okay. So when the community is really enthusiastic, the premium heads up towards 3. When Bitcoin's stuck for a while and people get bored with it, it starts to migrate towards 1.5. And that's kind of the way I view it is a sentiment gauge, just like for stocks, you have all these sentiment gauges. When people in the community decide that it's time to buy, they will jump on this in a very quick manner. Between now and the end of the year, the allocations of Bitcoin for next year from the traditional finance world are going to be increased. That is going to happen. And we make a lot of decisions on Wall Street for next year. When people make their allocation changes, I think that's going to happen in the final quarter of this year. And I think Bitcoin's allocation number will go higher across portfolios.
Likewise, crypto is no longer a fringe asset class. Visser sees it as the most logical investment in a world of perpetual debasement. He highlights the synchronized movements across the crypto ecosystem, from Ethereum to altcoins, as a sign of coordinated bullish momentum. He even points to the premium on MicroStrategy stock as a real-time sentiment gauge for the Bitcoin community, noting that a high premium signals strong enthusiasm.